I have a
Hey
good
Corey.
deal.
Hey Corey.
Hey,
It's
Kurt.
Kurt. How's it? Good morning, or
Good
wherever you
morning.
are. Happy little Friday. Before you start, I brought some people into the room. Cyrus Dixon, love the hat, man. Hey Cyrus, and
Hey,
then is
Cyrus.
Davita in the room too. So I just wanted to, if you don't mind, inviting their investors. So they wanted to be involved. So sorry to meet to cut you off, Corey.
No, no. Thank you for introducing them, man. Um, I just want to say one thing. I like if we're in Leeds needs good deeds, and one of the good deeds I can share is Kurt has been super generous in helping to provide tools and stuff for us and data, which right now is like that is it's like gold, right? The more data you have, and it can help you make better and quicker decisions in times of like kind of uncertainty. So thank you, Kurt.
Oh,
Really
you're
appreciate
welcome.
it,
I'm
man.
here
And
to
thank you
help you
for
save you time and money, so you can save the money to buy gas.
yeah, yeah, no kidding, right? Yeah. But thank you, Kurt. True go giver, man. Yeah. Um, well, welcome to those who are new on the call. It is our 100th episode. Maybe we gotta throw a party or something. Um, but does anybody have anything? Any deals? Any funding? If any trouble they're in? A little time. Okay. Maybe I gotta start calling
Hey,
on people.
hey, Corey, actually, I got one.
Oh yeah, who's there? Oh, sorry,
It's
is this
Jason.
Rick? Oh, geez.
It's Jason. Yeah.
Oh, there you are, Jason.
Hey,
What's up, Jason?
hey, hey, guys. So,
How's it?
I actually have a property in Atlanta that I was actually trying to flip, but I think with the rate change, it's kind of just not going to work as a flip. So it's like an entry level in the city, and because rates went up, you can probably rent it cheaper than you can buy it. And previously, that was just not the case. You could buy it cheaper than you can rent it. So the issue with an end user would be the down payment, which is a problem for some people. So I'm actually looking to exit in a different way. I would keep it and turn it into a midterm rental, except I have a partner who I'd have to negotiate buying out and kind of just like renege on everything that I promised him. And I'd rather actually just sell it to another investor. So I think it would actually work as an okay midterm rental. So when I looked at midterm rental comps on Furnished Finder, it'll rent for $2,000 to $2,200 a month, and I'm looking for a purchase price of $260, which I think is a deal. So there's a unit down a couple blocks over that's like rental grade finished that's under contract for 260. So I think 260 for a rehab, you know, in a flip product house is probably a good deal. So I think I'm just kind of putting it out there, So if anyone's looking for something for 260 that you can probably get $2,000 a month for, that's what, like a maybe 0.75 maybe of rent per month. Yeah, I think that would be pretty good. Like when you're looking at like a 1% rule kind of thing. So it's it's not a bad investment in a decent opportunity.
Yeah. And
so just
is
putting that
it
out there.
Single family home?
Single family. Yeah.
In
Yeah.
Atlanta, Georgia.
It's a three. Yeah. In Atlanta, it's a 1.5. And I actually have your a property manager ready to pick it up. So, you really just need to buy the house and furnish it to the strategy that you want. So it's a 1.5, but I actually recommend only furnishing 2 bedrooms of it and converting one as an office, and just making sure you put high-speed internet into it. So yeah, so if anyone's interested, DM me on Instagram and I can shoot you the info.
Is that your handle on that's showing on screen?
Yeah.
At Jason on 808. Okay.
Mm-hmm. Yep.
All right. Nice. Okay.
Cool.
Yeah, the numbers
Thank
are
you.
actually don't sound that bad.
It's not bad. Yeah. Like it, and again, I would keep it myself. It's just I have a partner that I'd have to address. So yeah.
Yeah. So what happened, you said, was obviously like now it's cheaper to rent over there than it is to buy, right? When you're talking about cheaper, you're talking about monthly payments, right?
Correct.
I'm assuming. So midterm rental, you're saying, are you thinking like something along the lines of, because like who comes to mind is Lisa and Leo, who would come on our calls. I don't know if they're on today, but they would do traveling nurses, I think. Is that like a market for that, or is that too far from any?
Yeah. So it's not like close, it's not walking distance, but you know, I looked on Furnished Finder and there's literally comps in the neighborhood for 2000, and there's another one for 2200. So I think that's about where it would end up.
Okay.
In terms of a long-term rental, what my property manager told me was between 1400 and 1800 unfurnished, you know, as is. So I think it just kind of, I'm not 100% sure. I've just seen like a lot of variance in that segment. So, but 1400 to 1800 long term.
Got it. And do you need all of it to cash out your partner?
I think I have a little bit of room at 260, but well, it's actually a profit split. So
Gotcha. Okay.
yeah, I'd kind of need that price. So
okay. Yep.
I mean, I can cut myself out at this point. So I just kind of want to recapitalize. I just think, you know, again, you know, 3 or 4 months ago, the price point would have worked out really well. Right. And we could have got someone into the home, but yeah, not with rates the way it is.
Yeah. Yeah. Okay. Well, if anybody is interested or knows somebody that might be interested, or knows someone who's in that Atlanta market, I know there's a few of our guys on the team that have clients in Atlanta. We've closed deals in Atlanta. So perhaps I can't recall whose client that was, but we can dig through and see and reach out to them and see if they're interested or their network. So
and if you want to buy like kind of semi turnkey, you know, I got an ace property manager who will midterm it for you.
Nice. Okay. Perfect. Do they manage like the marketing too, or like filling
they'll do
everything?
All that.
Okay.
Yep.
Okay. All right. Nice. Okay. Thanks, Jason.
Great. Thank
Hopefully
you.
we can get something for you. All right. Does anybody else have anything?
Hey guys, I'm gonna jump in here, right? We're in a real estate chat conversation. So real quick, my name is Cyrus Dixon. I am a full-time real estate investor out of the state of Virginia, but we're expanding into Hawaii. And so we have some other markets as well. Kurt, thank you for this opportunity to bring me in, man. It's aloha, right? I'm sorry. So you gotta forgive me, right? I'm here with my partner, Davida, and we're super excited to be able to be honored to come in the room and have this conversation. So the HOBO, right? HOBO stands for helping others buy and own. So that's the concept behind HOBO. But we have this amazing company that we're establishing on the island, primarily Big Island. And so my question is, I've been wholesaling for years, buy and hold, fix and flip. However, I've never done anything on the islands. So it's completely challenging effect as I'm learning about the agricultural, lava, et cetera, et cetera. So to keep a long story short, I have a property that we're gonna be closing on. The renovation may be just as much as the purchase, but the value of the property is probably gonna be 3 times more than the purchase price. So I know I'm gonna be at my 70 to 75% equity easily, but I'm having struggles and troubles finding US non-island lenders that understand the market and how to get into helping us get this property. We have the capital put in for it. We're just trying to figure out what the nuances is for Big Island, the lava levels. I think it's in a lava 3 area, 2 to 3 acres, beautiful resort. And so we're trying to convert it just into that as a resort. So any help that you all could provide, that's the reason why Kurt tagged us in. So you'll see my face more, and then I'll be on the islands eventually at some point in time, right? I'll move out there if you want me to, right? Don't pressure me to move to that. Okay, if you have to, I will. But just kind of need some help there. But I mean, hopefully I can provide some content, some support and help, because again, we help others buy and own. That's our goal. That's our mission. And I'm not trying to sell my brand. It's just in my heart to be able to help other people.
Awesome. Well, thank you, Cyrus. You're in the right room for sure. I can answer a few of your questions. For us, we're a hard money lender. We lend nationally. and we've done a lot of loans out on that side. It sounds like you're looking at Hilo side in the Big Island. So most hard money lenders, us included, I believe, will only lend in Lava Zone 3. So
Okay.
so you're in
And it
zone
is
3,
Lava
right?
Zone 3.
Yeah, so just a heads up, if it's Lava Zone 2 or anything else, like we probably cannot. Like so what was your other question about? You just wanted to be familiar with the islands here?
Yeah, so I'm familiarizing myself with the islands, with the nuances of being, I mean, it's an island, right? So it's different from being in the States versus the island. I can find lenders galore here, but trying to find a lender. So I definitely will connect with you offline and we'll go over the deal and some more intricacies, but we're super excited to move forward. Just run into the stumbling block with actually getting this property. We have the capital if we need to buy it, but we're trying to, be wise with our investments, find the right partners on the island as we grow our portfolio on the island. Yeah.
I love it. I love it. And I love your approach too. It's same as ours. If we go into a new market, like we want to embed in the community, meet the people who are actually, doing deals and be a part of the community, provide value, so we're happy to have you on board, man, and hopefully learn too, what you've been doing. Virginia, we've closed deals in Virginia as well. So
Okay.
I don't know how you're closing deals out there, but I'd love to see how we could maybe compete, to maybe earn your business too over there. Over here, absolutely, we can help you. There's many people on the call that have resources in Hawaii and experience in Hawaii. One thing I'd say is that what I've noticed in Hawaii is it is a different market. The fundamentals are the same, just like anywhere else, but the Hawaii market is competitive, and there's not as much volume, so I have yet to see a wholesaler who's done it professionally scale really big here. And I'm wondering if it's just because wholesalers here just haven't developed the proper systems, or if it is because of a volume issue, right? So because we are really low on inventory here, which creates a rise in our prices constantly, right? That's why we're a strong appreciation market. So I would love to speak to you, to talk about the Hawaii market, but also Virginia's market and see the difference. And then perhaps we could share amongst everyone here. And what I've found with Hawaii is our market kind of shadows a few markets in the mainland, like San Diego's market, like almost to a T, like 6 month lag. So we can kind of use San Diego as like markets like San Diego as like leading indicators for us, now in these times it's kind of very unpredictable. So perhaps that's no longer relevant anymore. Maybe we're not 6 months behind, maybe we're 2 months behind now, or maybe we're 8 months, ahead. I don't know. But it is different. And I like your style and coming to meet the people who are investing in that area and try to be a part of the community. So we'll definitely try to see if we can help you.
No, listen, I'm looking forward to it. And I don't want to take up too much time, but put it like this. We put a house on a contract. It's a 2-bedroom, 1 bathroom, 726 square feet for $14,000. So we're dealing with completely different numbers, but in the island, I think our primary goal is not to squeeze into the wholesaling space, it's actually to start buying some property on the island, and it'll be a great vacation spot, right?
Yeah, always is.
Cyrus, put your contact information in the chat so everybody gets it, if you don't mind.
Yes, please.
Yeah, and also Jason, I have some good friends down in Atlanta that if you want me to connect you guys, I'll connect you guys. I don't want to split it. If it works out for them, it works out. If it works out for you, we do what we do in real estate, right? We solve problems every day. But just shoot me that information. I'll send you his information. His name is Tim Harvey, and I'll try to connect you guys.
I love it. That's what it's all about, man. Thank you, Cyrus, and thank you, Kirk, for thinking of inviting him on. We say it often. It's like I don't think there's a problem that's too big or too complex that we all can't figure out together here on this call. Because I know who's on this call for the most part. I know pretty much everybody. And there's a lot of resources here, a lot of knowledge. So don't be afraid to ask for help if you need, so because there's people willing to help. And thank you, Cyrus. Hopefully we can put something together for Jason. That's what it's all about, man. That fills my heart. Let's talk about what's going on then. If nobody else has anything, if you do, feel free to just drop it in the chat or unmute. Just a quick update from watching the recording on our MP call that happened yesterday. So some of the notes that I got was the conversation, and I cannot play it. I would, if I could play it for you guys to watch some of it. It's very powerful, I feel. I wish I could, but since I cannot, I'll kind of do a synopsis. But the energy on the call was one of short-term pain, long-term gain, is what I can say. So there's a lot of movement going on the money side. There has been for over the last, I want to say 4 weeks, last month. And what's happening is the liquidity is drying up. So the capital providers are not in the space anymore as much as they were about maybe 2 months ago. Some of the big ones have stopped buying notes already. So how does that affect us, right? Well, that affects us because if there's no liquidity in the market, then your lender who may be doing your loans for you, whether it's fix and flip or ground up construction, if they're heavily tied to the capital markets, then their leverage and rates may change dramatically, and it may change while you're in escrow. That's how volatile it is. And also there may be a point where they may not even be able to fund. So a couple months ago, it was more of like, let's kind of ring the alarms and huddle everybody. Now it's more talking about how to really mitigate risk. So I mean, I'll say a quote, and I don't want this to be like fear mongering or anything like that, but it's something that we should be aware about, and normally we don't get to hear this information until things already happen and the pieces have moved across the board. Fortunately, we're a part of the MPLA and we can get this information, but they're eluding the environment in the private lending space and really the market, where it's like, this is a quote from one of the CEOs of Rock Capital. It's like, we had the car crash, but we haven't hit the windshield yet, is what he said. So they're expecting a lot of changes to leverages and prices with the loans. So their advice to us, who like we're originators, right, and we're borrowers too, is we have to make sure that we set expectations right with our clients coming in, with new deals coming in. And the expectations are that, the rates and the leverages are very volatile right now. So if you're using hard money, I think it's not a question that's beyond your means to ask your loan officer or whoever you're working with how they're doing in this environment, and if they see any problems. Now you have to remember, if you're speaking to a LO, sometimes like their job is to be on the front end, right, and to originate loans and to service their clients. So you may not get the full story, but you can at least ask and ask how they're capitalized, because if they are selling their notes to the market or buyers on the market, then it might affect your loan either at closing or during the construction process if it's a bridge loan, right? So just a heads up, I think communication with whoever your capital provider is more important than ever. So just be aware. Our attorney, John Hornick, he always keeps us up to date with what's going on because he sees everything. He's the attorney for most of those companies, most hard money lending companies he manages. So he sees all the loans that are going upside down. He sees all the loans that are needing extensions because there's borrowers who are stuck where some markets turn pretty quick. They're kind of stuck with longer days on market on the back end, or the rates are so high now that it makes it hard for them to refinance, right? So maybe 4 or 5 months ago, when someone entered into a project that they're looking to BRRRR, the numbers and the DSCR checked out, but by the time they're ready to refinance, the numbers no longer work, right? So like Jason said, the market has flipped where now it's cheaper to rent than it is to buy in some markets. So just be aware that there really is a lot of changes going on. So more than ever, this is what our call was born from, right? From COVID, because we've been here before already. And in fact, during COVID, it was a lot more drastic. It was like a straight free fall. Like I think they had to stop the market like 3 times in a day. That was when there was a lot going on. I don't see it being that crazy right now. I don't think it's not going to be a drastic drop where there's a lot of companies that in the finance side that are no longer playing. But I think it's going to be a slower decline, meaning like interest rates are going to be going up, and it's going to be a longer process. They're projecting like maybe 12 to 18 months once they declare like officially recession. So what that tells me, and I don't know about everybody else on the call, is that there's going to be a lot of opportunity for those who are positioned correctly. And I think this is the same theme we've been talking about over the last couple calls, but I don't think it's a topic that can be discussed too much in these times. And that is like, how do we position ourselves to be on the right side of any turn or or where we think the market will be in possibly 6 months, right? So I'd like to open it up to get some insight in the room. And I know there's a lot of us who are also in different markets. So does anybody have any insights that they're seeing in their markets or the strategies they're pursuing? If you were primarily doing BRRRR strategy, did you run into the same problem where you can't refi on the back end because the numbers don't work? Or is it harder to sell because you're sitting longer?
I think guaranteed for the BRRRRs. Actually, Kathleen was working with me on our DSCR one, and it's actually like the back end definitely was impacted as far as like the rates and what's available, I think. And so definitely if you're trying to BRRRR, it's gonna be a lot harder on the back end to kind of like cash flow positive or get like a higher LTV or like get your cash out, I think. So
yeah. So but are you guys still able to close, or is it becoming unfeasible anymore and you have to sell?
Well, Kathleen's a rock star, so she got it done for us. But I mean, so we did close. We didn't get the terms we wanted as far as like originally, but we'll take what you can get basically at this point. Like, just because it's such a crazy market. So like we originally wanted to put like a lot more cash, but our LTVs and our rates went a lot higher because of like the market. So like, but we'll just take what we can get. And then like, luckily we have the cash reserves to stomach it. So then like, that's like I think a good point is like, if you're planning to like, your only exit strategy is you have to do 100% BRRRR, or you don't have the cash reserves to handle or leave some money in, then like you gotta be careful. But as long as you have the cash reserves, so okay, like if I don't do 100% BRRRR, I'm still okay. Then I think like that's like the responsible way to do it in these, I guess, times or these periods.
Yeah.
To add to that, we started that loan and we were closing him at like, was it 75%, 6.75, but rates kept going up and everything, the goal being for him to pay off his first and second. So we ended up doing, what was it, 7 point, what was it, Daniel, 7.3 something? Or 7 and an 8?
Yeah, something like that, 7.35 and like a 70% LTV. But
we had to go down to 70% because the DSCR kept dipping. And so as you get below 1, the pricing just goes crazy.
And so that was like a 40 grand swing that we had to like leave in the property, that 70 to 75. That's basically a $40,000 difference that we had to stomach. So that's basically $40,000 out of our pocket that we're not going to get, or we're going to have to leave it to the deal, right? It's like, it's equity trapped in the property that you can't access. And so like, for us, we're in a position where we can, it's okay for us. But I think depending on where you are, you just got to be careful about what your exit strategy is and what you want to do. So definitely.
Yeah, I think
Great.
the cash issue is huge now. You've got to have your cash reserves so that you can project things like that.
Yeah, absolutely. And thanks for sharing, Kathleen and Daniel, because I mean, it's real life examples, right? So it's not just hearing it that, you know, somebody got stuck in a project because of the rates. That's something that you guys are dealing with right now. So how to like taking that information, right, and learning from that is like, if you're burning, then we have to be conscious about the exit, right? Whether you're selling, if you're selling, then you have to be conscious about the buyer pool. Like if you're in the jumbo space, then that's gonna, you know, immediately shrink your buyer pool. But actually, I heard jumbo rates are actually lower than like a conventional. Is that true?
No, they're still higher.
Oh, really? Okay.
Yeah, because for instance, like I'm closing one, we're doing 5.365 on it right below jumbo, but the jumbos are over 6 and then you have to pay points.
Yeah, gotcha. Wow, that's good rates. Is that
the conventionals are still good on the 0 points, yeah, but they dipped last week and now they're starting to creep back up. So the lucky ones were able to lock this week.
Right. That's right. It did dip, huh? Yeah.
But one thing on the DSCRs, just to know, I mean, they're great because they're no income, but I was just in a webinar the other day and they're dropping down to like 60 to 65% on their LTVs. So that's how they're trying to cover themselves as well.
Yeah, there's a lot of in the DSCR market, it got slaughtered. Like it was the hottest thing ever. You know, everybody wanted the DSCR loans. And then the rates started going up and now it's almost unfeasible at the rates that it's at, you know, so you have to get a really good deal to make the numbers really work for you. But on the DSCR side, I know there has been a lot of capital providers that lost a lot of money on those loans because by the time they're done either selling the notes or securitizing them, the rates have changed and now the buy price, you know, is maybe 100 basis points higher and they have to eat that cost. And if they originated like 30 million worth of these DSCR loans, like 1%, like that's not a little bit of money, you know, it's 300 grand. So, and that's just one pool of loans too, right? So there's a lot of lenders that lost a lot of money in the last quarter on DSCR loans. So now maybe they're overcorrecting. I don't know, because 60% is pretty low. But we're starting to see like true private and hard money now, you know, because we called it hard money and private money, but ever since Wall Street came in the game, it's institutional money. That's what it is. So I think again, it's important to know how your lenders capitalized. You know, our capital providers, fortunately, are not tied to the capital markets as much as some of the other guys. So the line that we use to close all of our loans, it will remain open. And we're going to be lending aggressively. So if you know anybody that's stuck at the table, we'd love to take a shot at helping them. If their lender couldn't close their loan in the private money space. But real quick, just finishing some notes from the NPLA call is John Hornick again, his advice or his statement was that the system is definitely broken right now in terms of funding loans. Lenders have been backing out at the table and there's a lot more to come. Like we're in the early stages, he thinks. And so he said, be really cautious. And this is him speaking to other lenders on the call. Okay. So he's saying, be really cautious on your pricing. Don't be skinny and thin because your trading partner might not be there on the other side. So that's the conversation that's going on right now in the background. So pricing is going up, possible leverage cuts, and they're expecting this to continue, like to only get, you know, more expensive and less leverage for I guess perhaps even close to the end of the year. So
Corey, are you guys seeing like any LTV or any changes in your hard money products, like less LTV or like, you know what I mean, or like more stricter terms or anything on your side?
Yeah, so we definitely the price has gone up a little bit, even on the bridge loans. The DSCR loans, I mean, I think we're starting in the high sevens now. In fact, it's not even a product I think worth talking about, unless it's a really good deal. But the leverage hasn't dropped on our bridge loans, only in specific states and counties, which I'm trying to still get a list, because I know we have it somewhere. It's in our guidelines. And if I can get a hold of it, I will put it in the Facebook group so that people are aware. The reason why those states were listed, or some of them are counties too, is because they've seen the biggest decline in values since the start of all of the interest rate hikes. So it seems to be the states that went through maybe the biggest appreciation during the last year, the biggest spike, and now is correcting. So that's what I mean. Leverage wise for us, we haven't really seen anything too much, other than like if it's a DSCR loan, and if the DSCR is below like 1.5 or 1 point something, then we take like a 5% hit on the leverage. But other than that, I don't think, unless I'm missing something. I know we have Kelly on the line. They know the guidelines, because they change like almost like daily, for sure weekly. So they're more in the know than I am, actually. But whenever there's like kind of chaos, there's usually opportunity, right? And so with that said, we're moving forward. It's a big project of ours, and I was gonna mention this in leads, needs, and good deeds, because we definitely need something from all of us here on the call, because we have an opportunity to start a fund. We're gonna start another fund. It's gonna be a MES fund and an NPL fund. So an NPL fund is it's a non-performing loan. NPLs are non-performing loans. So, and for us, our goal is to raise 10 million. And the reason why we're going to be raising 10 million is because we can leverage that 10 million and get a multiple at a much cheaper rate. So really, we're raising 10 million just to secure the multiple. And then through that line of credit, we're going to pay back our investors, or those who want to stay in and kind of be a part of this journey. We can work out possibly, some sort of structure where it's beneficial and lucrative for everyone. But if not, at the very least, maybe what we're throwing out there for our need is that to just have some support and some cheerleading, because if we can secure this, which I'm very confident we can, then we're going to have access to a lot of money at a very cheap rate that we can bring to Hawaii and hopefully fund many of your guys' projects. And it's going to be money that's in our control within, whatever guidelines that we set. We're responsible in covering the debt service to our bank, who will be providing us the leverage for this money. But other than that, we can play with the money how we see fit, which is a little scary. But I think in these times, that's exactly what we need.
But Corey,
so we're gonna
the 10 million line and Bitcoin, bruh. Let's go.
Just throw it all in Bitcoin. BTC.
Gamble, bruh. Gamble. Whatever the lowest any place side, we'll be all trillionaires after this, huh?
Yeah. Well, yeah, I'm pretty sure I can't do that, even though the guidelines are pretty loose. So that is something we're going to be working on. I'm going to keep everybody updated as we get it more clarity on the fund and how it's going to be structured. But I think if there's ever a time for when, this call is important, it's like right now, like right now. So we're going to position ourselves so that maybe in 6 months from now, we're in the same space we are now, but we have more buying power, and we're gonna come all in, you know, in Gap. Maybe we'll come 100%. We'll do partnerships with everybody. But that's what we're working on. We can get this done fairly quickly, I think, with the right strategic partner. We already have a couple interested. But I do want to still keep it open for all of us on the call, because I think it's going to be a huge learning experience. Like, I've been kind of waiting for opportunity like this. You know, it's like the Super Bowl, right? When you started in real estate, like, I haven't been through any major pullback. Came in at the bottom on the way up. So it's been kind of good times, but the party's kind of getting a little stale. So now it's time, I think, to position ourselves for the exit, where we're going to go and what we're going to do next. And we're going to go buy some stuff, and we're going to help other people buy some stuff, right? Hopefully everyone on the call. So that's coming up in the future, just as a heads up. And if anything, I think this is going to be great for all of us, because it's going to be a nice learning lesson, whichever way the market goes. So does anybody have anything that they're looking at right now that they have on the table that is in need of financing, whether it's first position or gap financing? Please let us know. Now's the time. Tago's always. Yep. We're always looking for deals, always looking for money.
Corey, on the private lending side, do you see the rates then staying the same? And then what other opportunities do you see as the market changes?
Are you meaning for like private investors, like that?
Yeah, private investors,
like 8 to 12%.
Yeah.
That's a great question. For as long as I've been doing it, like I've only seen it fluctuate between like 10 and 12. So I don't know, but whatever it is, like, I always just pay at the top of the market. You know, like, our investors are very important to our business, right? And Kathleen,
okay, we'll take that.
Yeah, exactly.
But what other opportunities do you see? I mean, are you looking at, do you guys do syndications and that sort of thing?
Yeah, we do. We're only in one, but it's a fairly large one in Vegas. So syndications, I think, could be still a great play. I think where the opportunity is going to be, though, is in I think in buying properties at a discount in certain markets that are going to feel some pain, and that's why we're starting the NPL fund. The fund is going to be designed so that we can buy non-performing loans, because if you can get to the paper under the asset, then you're at an even more substantial discount. But the only problem is you have to have the right team, right? And sometimes you have to know the market as well. And Hawaii is, it's not easy to work with. So, but I think that's where the opportunity is going to be, and that actually is coming from John Hornick, who is our attorney, because he's seeing the tsunami coming in some markets. So for us, I think we're not going to just go after any NPLs, because I don't want to be foreclosing on like grandma down the road, or, it can be a nasty business, and I just don't know if I have the heart for that, to be honest. But for some of our colleagues who are lenders as well and have loans that have gone bad, or they need to liquidate because nobody's buying their loans anymore, we want those. I think that's where the opportunity is going to be, in the non-owner occupied NPL kind of market. So I have a lot to learn in that space, but I think we have the right team to handle the process, and then we take over. So what we're going to be looking at doing is any non-performing loans, we'll probably buy them. We'll send them to John and his team to help collect the property for us. And then once we own it, then we will probably sell it maybe to another investor, which hopefully will be below the auction price. So we're getting it not at the auction price. We're getting it not at the paper price. We're getting it at a discount of the paper price, because it's a non-performing loan, right? So if the loan is maxed out at 75% LTARV, then maybe the property's worth $1 million. Maybe the auction price is $1 million, but we'll get it at the paper price, which is like 750, but probably cheaper than 750 because it's a non-performing loan. So there's a discount to help us with mitigating that risk, right? We're basically buying a toxic asset and trying to turn it into a, a cash flowing asset for us. So we're taking the risk by doing that. But if it's in markets that like Hawaii, then it's not as risky for us. I feel we mitigate that risk through our experience and through our network, which is pretty much everyone here on the call, and all of our resources that we have here on island. So that's where I think opportunity will be. The main thing is just, I feel, is for all of us investors who might be looking at getting into deals now is I think now's the time we have to adjust our criteria a little bit. Maybe last call or the call before that, it was more of a question, like, is anybody changing their criteria yet? And it sounded like a few people have been, but now I think it's not a question anymore. It's like, how much have you been adjusting your criteria to mitigate your risk, right? So are you extending your holding times if you're flipping it, or it's always smart to have multiple exit strategies, but perhaps, looking at the exit strategies, whether it's to refi or sell, taking a hard look at both strategies and being honest in looking at what ways can you get stuck with this property, right? And maybe taking a 10 to 15% haircut on your ARVs going into deals might help save you on the back end. But either way, I think now's the time to start adjusting. Anybody else have anything to share? Nothing? Man. There's money in the room. I know people got deals. All right. Well, if anything does arise, then please feel free to reach out to anyone on our team, because we're going to be ready to help others, and also to pounce on opportunities. So partnerships, now's the time. I think now's the time more than ever, we're going to start working together closer and closer with everybody on the call, because that's how we get things done. In fact, I'm very confident we can fill this new fund just from the phone calls I had this morning from people in our close network, and that's how we make things happen, pick up the phone or go to the Starbucks and take the meetings. Let's close some deals, let's work this out and close some deals together. So, all right, guys. Well, if there's nothing else, then I hope everybody has a great weekend. Happy Aloha Friday, and we'll see you guys next week. Aloha, everybody. I'm gonna cruise for 10 more minutes because we're a little early. If anybody wants to hang out, talk story, chit chat.